Wondering how ETFs can fit into your portfolio? Join us for our Spring into ETF Investing event, premiering May 12th and 26th. Check out these two exciting two-part events, which we curated specifically for you, the DIY investor. Our special guest speakers and insightful industry experts will provide you with the information and education you need to confidently manage your own portfolios. You won't want to miss these specials. Visit etfmarketinsights.com for more information. And remember to subscribe to our YouTube channel for fresh weekly content. Hit the alert button so you never miss a post.
Hey everyone, Larry Berman here, and here's what's on my radar this week. On the economic calendar on Friday, we got the preliminary reading on UMich sentiment, and the numbers, well, to put it bluntly, were bloody awful. And markets had an okay tone today or Friday. Until this came out, and then it's kind of softened. Yes, well, in the last half hour, a lot of those losses kind of came back a little bit. But what we're looking at here is the expectations for future inflation on a 1 year and on a longer term basis. So let's dig into this longer term basis, because we saw an uptick here, and it's something to a level we haven't seen since the GFC. And so there was a spike in inflation expectations in the period, the early days of the financial crisis, where oil prices were skyrocketing. And you remember oil spiked up to $140 a barrel. So longer term inflation expectations, and even shorter term ones, are very much linked to what you paid at the pump, recently. And so the divergence now is that energy prices are very, very weak right now. And what we had heard this week from the U.S. administration is that they're maybe doing a little tip of the hat to Saudi Arabia and said, we're now in June going to start buying back the strategic petroleum reserve. So that helped support the energy market, the crude oil market this week. But the bottom line is sentiment is weakening, and there's so many indications that we're in for much more of a harder landing. I was actually reading Jan Hatzius' report this week, and he's still very much in the camp of a soft landing, recognizing the risks are tilted that way. But he's amongst the economists that think we only have about a 35% chance of a recession, where consensus is in the 60 to 70% range that we have a recession, this year. He does think that if it comes, it's probably more of a 2024 thing, but he points to a lot of things where this time is different, and largely has to do with the labor market. Labor market's improving. So, maybe, but that also means higher for longer, and the interest rate cuts that the market is pricing in right now, are not likely to come. So eventually there's some margin pressures coming to earnings, and we're likely going to see equity markets weaken, at least again to retest the lows that we saw in 2022. The Fed is almost out of money. The Treasury General Account within the next month or so will be at zero, and so the debt ceiling will get resolved, but the political nonsense before it, think about what happened in 2011, 2013, when we had previous debates on this, compared to the political divergence today, and it's 5x the problem, and it's 20 GOP in Congress that are adamantly opposed to anything that isn't, radical spending cuts. So the fiscal stimulus isn't going to be there. The monetary stimulus isn't going to be there. And so stagflation is probably a bigger risk than a lot of people think at this point, those in the soft landing camp. And kind of that's my radar this week. And equity markets just aren't priced correctly. And listen, I've been saying this for months now, and the markets are hanging in there, which, that's great. But again, sometimes Mr. Market is wrong, not often. I hate leaning against the trend, but the market is clearly struggling. And when I look forward, I don't see the catalyst to lift us out of this range, save for climbing the wall of worry. And I just don't think that that's something you want to make a bet on right now, given that the chance of a soft landing, in my version of the world, very different than what Jan Hatzius sees here at Goldman Sachs. Our bull and bear pick of the week. When I look for bull opportunities, I'm a buy dips guy. I look for what's cheap. I look for what's basing. To me, natural gas is one of the cheapest assets on the planet right now, and abundant in the U.S. for probably decades to come, given the fracking revolution. I think that right now things are pretty darn cheap there. We've been playing it by way of Southwest Energy. There's lots of different ways to play it. I would avoid trading the commodity-based ETFs and stick with more natural gas-weighted equities. But there's a nice bottom forming here. When is it going to break out? I don't know. But over the last decade, this $2 level, maybe a little bit below that, very, very attractive risk reward looking out a couple years. I like natural gas here as a transition, old world, carbon-based strategy, carbon-based fuel burner, and much cleaner than coal and so forth. So I think natural gas makes an awful lot of sense here. I think the LNG trade for Europe is fantastic. I think Russia is going to continue to be isolated by the West, and that means great opportunity for U.S. natural gas. And I'd love to say so here in Canada too, but that's a political foobar and unlikely to get resolved anytime soon. So bullish natural gas, bearish, cautious market environment overall. Have a great week, everyone.
Wondering how ETFs can fit into your portfolio? Join us for our Spring into ETF Investing event, premiering May 12th and 26th. Check out these two exciting two-part events, which we curated specifically for you, the DIY Investor. Our special guest speakers and insightful industry experts will provide you with the information and education you need to confidently manage your own portfolios. You won't want to miss these specials. Visit etfmarketinsights.com for more information. And remember to subscribe to our YouTube channel for fresh weekly content. Hit the alert button so you never miss a post.